Most people are about to get smoked in this market. They thought the bounce was real. It wasn't. Yesterday, everything reversed hard. NASDAQ down over 2%, S&P close behind, and this wasn't some random dip. It was triggered by Trump's new tariffs going into full effect. That's why I posted in my Patreon before the sell-off even hit, because when everyone's distracted by headlines, I focus on data. In this video, I'll show you why this correction was predictable, what most investors are still getting wrong, and how disciplined investors can turn this chaos into the opportunity of a lifetime. Here's what everyone missed. On the surface, the market looked strong. Early rallies, green across the board. But look under the hood and the cracks were obvious. Fear and greed index, still at 5, deep in extreme fear. The VIX, it was at 38 and is now even higher. These are not numbers you see in healthy bull runs. These are the warning signs of instability. And instability doesn't fade because people feel optimistic for a few hours. Now, what actually happened? The market reversed hard. This wasn't some small pullback. It was a clear rejection of the rally. And if you didn't see it coming, that's because you were watching headlines instead of signals. When I posted in my Patreon yesterday, I called this out. The data gave clear warning signs. Momentum was fading and emotional buying was driving prices, not fundamentals. When that happens, it's not a matter of if the market snaps back, it's when. That's the trap. Everyone got excited too early, chasing momentum with no plan, no patience, and no risk management. If you're serious about building wealth, you've got to learn to read through the noise, because most people don't even realize they're playing a different game. They think they're investing, they're just reacting. Markets don't crash without a catalyst. And yesterday, that catalyst was Trump's reciprocal tariffs going into full effect today at 12:01 a.m. Massive levies targeting the U.S.'s top trading partners. These weren't idle threats, these were actioned, and Wall Street reacted exactly how smart investors expected. They panicked. The narrative is changing fast, and here's why that matters. Most investors treat news like it's entertainment. They hear the word tariffs and think, okay, it'll pass. But history tells a different story. Trade wars are slow burns. They're not just headline risk. They're structural risk. They hit earnings, margins, and supply chains. They bleed into everything. And that kind of pressure normally doesn't resolve in just a week. Right now, this market is reacting to policy, not performance. We've seen this movie before. In 2018, when trade tensions last flared up under Trump, the S&P dropped 20% in just a few months. This isn't a glitch, it's a warning. That's why I'm not chasing anything. I'm watching, I'm tracking volatility, and I'm positioning for the real move, the one that comes when uncertainty clears. This is what I share every day with my community. Real-time data, not hype. The kind of stuff that helps you stay ahead of the headlines instead of getting buried by them. When the markets move like this, fast, erratic, violent, it's not a signal to jump in, it's a signal to pay attention. Nvidia dropped to $86.62 on Monday. Yesterday, it almost hit $106 and then closed down at $96.30. That's an almost 20% swing in 24 hours. You can't build long-term wealth in a market like that unless you know how to manage risk. That's why I didn't sell covered calls on Nvidia. I could have pocketed some short-term premium, sure, but in this environment, one news cycle can rip your shares away before the real move even starts. Volatility is like surfing after a storm. The waves are massive and exciting, but so are the rip currents. The real pros, they bring jet skis, spotters, and backup crews because they know how fast things can go sideways. The stock market works the same way. When volatility spikes, amateurs chase, professionals prepare. Right now, the VIX is elevated and extreme. That's not a buy the dip signal. That's a respect the risk signal. Volatility isn't something to fear, but it's absolutely something to understand. It tells you the market is nervous. It tells you the institutions are hedging, not buying. If you're watching moves like Nvidia and feeling FOMO, that's normal. Everyone feels it, but smart investors don't act on emotion. They act on probability. And probabilities in this kind of market say, sit tight, stack cash, and wait for the odds to shift in your favor. The people in my community, they already saw this play out in real time. I posted exactly why I didn't sell covered calls on Nvidia, and 24 hours later, that patience paid off. This isn't theory, it's execution. Now, I love generating income. Covered calls are one of the smartest plays in calm markets. But right now, writing covered calls can cost you way more than you make. That's not fear, that's math. Let's go back to Nvidia. On Monday, it dropped under $87. Yesterday, it almost hit $106. If I had sold a covered call too close to the money, I could have been forced to sell my shares just before the rebound. That's a huge opportunity cost. In volatile markets, you're not just playing with price, you're gambling with timing, and covered calls can punish bad timing like nothing else. When I posted about this in my Discord, I said exactly this. Sometimes the smartest move is to step back, manage the risk, and simply hold your positions. And that applies here. Sitting on your hands isn't laziness, it's strategy. You can be right about the company, right about the trend, and still lose if you play the wrong instrument in the wrong environment. Markets like this aren't forgiving. The risk isn't just price swings, it's whiplash. You get chopped up, assigned out, and miss the next leg up, and you're stuck watching from the sidelines. Meanwhile, the people who did nothing, who simply held quality stocks, they come out ahead. That's the game. It's not just about making money, it's about not losing positions with upside. Income is great, but not at the cost of your best assets. Right now, that's what's on the line. And you'll never hear this on CNBC, but that's why my real-time insights are different. I'm not trying to make things exciting, I'm trying to make them profitable. And sometimes the most profitable decision is patience. This is the part no one wants to hear, but it's the part that matters most. Right now, the single greatest edge you can have is patience. That's it. Not speed, not aggressiveness, not chasing headlines or jumping on whatever stock is trending on Reddit. Patience, because when volatility is high, discipline beats strategy every time. Warren Buffett didn't build generational wealth by buying every bounce. He waited for value, for clarity, for real opportunity. And when it showed up, he hit hard. That's how pros think. That's how money is made. Not in the chaos, but in the preparation. I'm not sitting on the sidelines because I'm scared. I'm sitting because I know what a good risk-reward setup looks like. And this isn't it. Not yet. The global picture is unstable, tariffs are active, volatility is elevated, and emotional trading is at its peak. That's not a green light, that's a warning sign. Some people will hear this and say, but I don't want to miss out, and that's the problem. That mindset, fear of missing out, is the reason most people lose. They want action, they want fast gains, and they get burned over and over again. What I'm doing right now is boring, but boring builds wealth. I'm holding my strongest positions, I'm stacking cash, I'm ignoring the noise, and I'm watching everything closely because I know what's coming. This isn't about being passive, it's about being deliberate. And when the real opportunity appears, I'm going to be ready to strike, not react, execute. This market is fragile, not just technically, psychologically. One solid resolution, tariffs easing, geopolitical tensions cooling, inflation surprise to the downside, and the whole mood flips. That's when the real move happens, and when it does, it's going to move fast. But here's the catch. If you're not already positioned mentally and strategically, you'll miss it. You'll be late, you'll still be licking your wounds from chasing the last bounce or panic selling into fear, and by the time the smoke clears, the pros will already be in. I'm not guessing. I'm watching the signals I covered in my last video. Those are the cues I'm waiting for. That's when I go all in. Until then, I'm running a simple plan. Hold my strongest positions, stay cash heavy, avoid unnecessary risk, watch the macro triggers, maybe DCA into a few stocks, and stay emotionally neutral. That last one might be the hardest part, but it's the difference between playing the market and getting played by it. If you're tired of reacting and ready to actually lead your portfolio with strategy, now's the time to shift your thinking. The biggest opportunities always show up when the crowd is the most confused. Right now, that's exactly what we're seeing. Confusion, panic, noise. But if you're calm, rational, and patient, you're already ahead of 90% of the market. And when the real signals flip, I'll be ready. We're not guessing, we're preparing. This is what I do. I track the data, I post real-time market updates, trade alerts, and my full strategy every day inside my Patreon. That's where this call started, not after the reversal, before it. If you're serious about catching the next move before it hits, that's where you'll find me. No pitch, just strategy that works, if you know what you're doing. You can also try my custom trading view indicators for free. The link's in the description. These are the same tools I use to track momentum, volatility, and macro pressure, because timing does matter. Now let's be honest about where we are. The market's running scared. No one knows how this plays out. The truth, it could break either way, and break hard. Everyone in the media is screaming that this time is different, but that's what they always say. It's not different. It just feels different because chaos always feels uncomfortable, and our memory, it's short. But this moment right here is where the biggest wealth transfers happen. not when things are calm, not when it's easy, right now. I'm not trying to predict the market. I'm watching it with precision. I'm managing risk. I'm controlling emotions. And when it's time to strike, I will, because I'm not reacting to chaos. I'm positioning myself to take advantage of it.